Today's episode covers a roundup of auto industry moves, Tesla's profit retreat, Lexus posting record sales, the influence of Elon Musk's strategy, fresh details on the new Mercedes Benz S Class, and GM's latest earnings report. Welcome back to Autonews Daily. I'm Leah Morgan. Let's dive into today's headlines. Tesla reported a sharp decline in profitability in its most recent quarter, a development that has reverberated across the electric vehicle sector. The company's margins, which helped define it as an industry leader, showed signs of pressure as pricing, competition, and rising operating costs intersected. For fleet planners and investors, the signal is important. As EV adoption expands, sustaining high margins is proving more complex than the growth story suggested just a few years ago. That profit contraction is prompting deeper questions about where Tesla will focus next to restore earnings momentum. Cost discipline, more efficient manufacturing, and careful pricing strategy are likely to top agenda items at the company's executive level. At the same time, rivals are advancing their EV portfolios, meaning Tesla could face tighter pricing competition while working to maintain scale advantages and software differentiation. Moving to the luxury end of the market, Lexus announced record sales, underscoring continued appetite for premium vehicles. The brand's performance highlights how luxury buyers are still willing to trade up even as the broader market navigates economic and supply chain headwinds. For suppliers and dealer networks, Lexus's gains are a reminder that premium segments can remain resilient when product portfolios align tightly with consumer expectations. Those record sales also reflect strategic shifts within the brand. A mix of refreshed models, stronger customer incentives in key markets, and a focus on features buyers value most. For competing luxury marques, Lexus's results will prompt a closer look at feature sets, inventory management, and marketing approaches, especially where hybrid and electrified luxury models are gaining traction. The broader conversation about strategy and leadership in the EV era keeps circling back to Elon Musk and his approach at Tesla. Analysts and industry observers are debating how Musk's willingness to take large, high-visibility risks affects the company's long-term plan. That mindset has driven rapid innovation, helped Tesla set standards in areas like vehicle software, and created a strong, almost cult-like consumer following. But risk-forward strategies carry trade-offs: tighter attention to short-term headlines, heavier reliance on charismatic leadership, and potential volatility in execution. For executives across the industry, the Musk model offers both a template and a cautionary tale. Fast moves can capture market share, but they also require robust operational controls and contingency planning to sustain growth without eroding margins or customer trust. Shifting to product news, Mercedes Benz has rolled out fresh details on its next S Class, a model that remains central to the automaker's image and engineering showcase. Early information highlights a blend of refinement, technological upgrades, and performance updates intended to keep the S Class competitive at the top of the luxury ladder. The new generation is expected to carry forward Mercedes's emphasis on comfort, integrating advanced driver assistance and connectivity features in ways that suppliers and software partners will be watching closely. The S Class remains a bellwether for parts makers and engineering suppliers because its specifications often presage features that trickle down across model lines and even across brands over time. For dealerships, the new S Class will test how consumers balance cutting-edge tech with traditional expectations for driving quality and craftsmanship. For the broader market, the car's debut is a signal about how legacy luxury brands are marrying electrification and digital services with the tactile experience that defines high-end automobiles. Please like and subscribe. It helps us keep bringing the news for you. Finally, General Motors released its quarterly earnings report, a closely watched snapshot of North America's largest automaker navigating numerous strategic priorities. Investors and industry watchers parsed the numbers and management commentary for clues about how GM is balancing traditional internal combustion vehicle profitability with heavy investments in electric vehicles and software. The earnings conversation also touched on supply chain normalization, pricing dynamics, and capital allocation toward new technologies. Beyond the headline figures, GM's report matters because it sets expectations for suppliers, dealers, and regional manufacturing plans. Decisions about where to invest, which platforms to prioritize, and how quickly to scale EV production will ripple through Tier 1 suppliers and logistics partners. For competitors, GM's financial posture offers a benchmark for judging the pace at which legacy automakers can transition toward electrified portfolios without sacrificing near-term financial stability. That wraps our look at today's most important stories. If you found this useful, please like and subscribe. It helps us bring the news to you every day. Thank you for listening, and see you tomorrow.